let's look at Fiverr. First off, read this disclaimer carefully. We will look at a theme called Flexible Workforce. The performance is pretty darn good. I mean, 191% average from the 52-week low. Fiverr is the best performing, approaching 400% from the low, basically at all-time highs. Okay, so flexible workforce definitively is a very strong trend, but you could make a very strong case that we have gone way too far. So, okay, just to be clear, I'm bullish on Fiverr long term, but let's look at some other data, and yeah. It is basically begging to be shorted at this point. So what is Fiverr? Okay, so this is a freelancing platform. So get work done faster with confidence. Payment protection guaranteed. Payment is released to the freelancer once you're pleased and to prove the work you get. That's good. Know the price up front, find any service within minutes, and know exactly what you'll pay. No hourly rate, just a fixed price. That's also very good, because a lot of consultants love hourly rates. But fixed price, it means that you need to actually deliver what you promised. So this is great. And we're here for you 24/7. Reach out to us at any time. We have your back, from answering your questions to resolving issues. So here are some of the services you can get. A lot of it is in the marketing-ish business, though this is going to expand. Programming and tech, and probably other things will come soon. Let's look at business. Maybe they have accountants. Market research, HR consulting. So this is new. So they are adding stuff all the time. Financial consulting. I don't see accounting yet, but that's one of those things that makes a lot of sense to just add. So basically they will add a bunch of stuff, most likely going forward. So yeah, this is a great marketplace. The stock hasn't been around for that much time, hence the seasonality data we have here is, it tells us a little bit, but it's not that useful. Yeah, okay, so let's go into the charts. So this is the long-term picture, at least the data we have for ever since June 2019. First, we have a bit of a rounding bottom, a bit of a deep cup and handle, I guess, but maybe this handle is a little bit too deep. Well, anyway, then we see a monster rally. So if you zoom back a bit, you can see that this is like a hockey stick. I mean, it's been extremely bullish, taking a little bit of a breather here, but you could make a very strong case that we have gone very far, very fast. The RSI on the weeklies is 83. That is really, really, really high. The accumulation distribution is showing that there are buyers stepping in. That's of course good. But you can make a very strong case that this stock is, it needs a breather. Because, you know, this isn't that long ago. Here you have people a bit more skeptical. Even here people are a bit more skeptical, but now all the skepticism has just gone out the window. Hence the psychology of this stock and the traders has changed completely. Here there is no skepticism whatsoever. So yeah, this is just euphoric. So let's look at the daily data points. Here we get even some correlation. There's basically no correlation. There's like a 7% positive with the S&P 500, but basically no correlation. That's actually kind of good. RSI here is showing actually some bearish divergence. The accumulation distribution line is showing that the buyers have been stepping up, but if you compare this level here to this level, it's not that much. The change is not that dramatic. Meaning there are signs that this is a bit of a... This is definitively the euphoric phase, where it is just the last buyers are stepping in. To be perfectly clear, the bulls are very obviously under control. There's no clear weakness yet, but, you know, if I were to take a position on Fiverr for the coming weeks, I would feel more comfortable being short, bearish on Fiverr than being long, bullish, even though looking far into the future, like multiple years, I am bullish on Fiverr. It is just that this has just gone way too far. And ask yourself the question, when you look at the chart like this, okay, so let's say that you do not have any position on Fiverr, would you feel comfortable buying here today? I don't think so. You would look at the chart and be like, well, it's kind of up a lot, like a whole lot. You know, it looks very bubblish, very euphoric. What is so different here compared to here? Even back here, people knew that there was a trend towards a more flexible workforce. That was a trend back here as well. Sure, the contagion, the lockdown, it accelerated the process, but let's be a bit rational. We all knew that digitalization of the workspace and a mobile workforce was a thing. So, you know, yes, things have changed, but have they changed this much? I don't think so. So that is the chart and my take on the chart, but let's look at some additional data. The price sales and the price book are really, really excessive, gone up a lot. So that's to the bearish side, not a value stock. You look here at the performance; it's amazing, it really is. But you could make a case that, you know, a lot of the bullish gains have likely, at least for the intermediate term, have been made. It gets more interesting when you look at the target price. Okay, so you have a bunch of analysts, you know, JP Morgan, Oppenheimer, UBS, Citigroup are covering the stock. Okay, so the stock is currently trading at $84.56. The analyst price target is $57. That is minus 33% below the current price, which, you know, ties into this notion that maybe this stock has gone way too far. Even when you look at these trend lines that Finwiz puts in, you see that the recent rally has just exploded through all the trend lines. Yes, this is very, very, very excessive. If we go to Saks.com, they do still actually have a number to buy here on Fiverr. D value score, B growth, and B momentum. Top 30% is the industry rank. They categorize it as internet commerce. Yeah, I kind of agree, though I would say that this is a bit more specific. This is why I have the, you know, the flexible workforce theme. Market cap is $2.6 billion US, so there's some size to the company, but certainly more, you know, growth potential. No dividend, no surprise there. Yeah, so basically, to sum up my take here on Fiverr, long term, I am bullish, but I find it, I mean, it's basically begging you to short it at this point. Yes, the bulls are in control, so let the trend be your friend and all of that. But then again, look at this. Would you buy here or would you be bearish? At least for the shorter time frame. Yeah. Yeah. A lot. Gone up. A lot. Whole lot. Okay. So that is Fiverr. So let's look at some get some picture here of the market. New week. So there's the S&P 500 futures. They are, you know, we are seeing some rally here today. We are still stuck in this consolidation box. If we close above this level here, you know, from this bearish day, that would be it would be a significant, you know, gain for the bulls. It would be neutralizing this candlestick, which has been sort of like shadowing this entire consolidation. Yeah. But S&P 500, it has now quite clearly basically been shuffling a bit sideways. And seasonally, we do expect there to be a correction. That we haven't had this, you know, clear correction yet, it is a bit of an issue, because it has to do with the dynamics of the market. It simply is not healthy. So let's... Here you have the German stock market. We're seeing a little bit of a similar pattern to what we saw here with the S&P 500. Though there is arguably more constructive development here for the DAX, the German index. Yes, there's that. If you look at the Nasdaq ETF, the QQQ, I mean this is I mean the bulls are clearly in control, but then again this is one of those indexes that is basically daring you to short it, and it is just very excessive. So you got to always ask yourself the question: would you at these levels prefer to enter a bullish position or a bearish position? That's the question. I would not feel comfortable here going like, oh, time to load up on a bullish position here on the QQQ. I mean, I would start to think like, okay, we've gone up a lot. Maybe we are very due a pullback, because this looks very bubblish. Very bubblish indeed. Let's look at some other markets while we are at it. Or maybe we should look at the gold futures actually. So here is the gold, very strong. We did have, some solid consolidation before we broke out. Looking longer term, we are heading into, we are actually above all of these resistance levels, so a very impressive gain here for gold. Before we break out to a new all-time high here for gold, I would ideally prefer that we actually form a bit of a cup and handle. Maybe go down here a bit, cool down, and then make the move. But, who knows what the gold bulls will decide. It's just that it's a bit more healthy. Because now there's been a very aggressive move. Very aggressive without... it would just be helpful to have a bit of a pullback, because it's such a symbolic move to make a new all-time high. Hence, it would be good to relax a bit, and then have the fuel not simply to make a new all-time high, but to just push, above it. And then maybe have a bit of a cool down where you use these prior levels as a support. At least that is one way it could play out. Let's look at crude oil. We've seen some pretty decent move here of the lows. We are kind of topping out a bit here, but we do have some clear support here from the 20-day moving average in purple. There's that. Yeah, let's look at TLT. The 20-year Treasury Bond ETF, American. Yeah, you could make the case that this is a bit of an inverse head and shoulders pattern, a bit of a shoulder here, head and shoulder. We are breaking out. The challenge is that there are quite a few resistance levels, because when you look at the current price level, look back and see what happened at these price levels. It is quite clear based on the history that this region is where there's a lot of battle between the bulls and the bears. There certainly seems to be a dicey region. Okay. Let's look a bit also here at some of the other themes in the zeitgeist. And there's quite a few very interesting themes here. The performance is very much stronger than the S&P 500. So, holograms, 991% gain. I'm quite bullish on the holograms. That looks very interesting. Cryogenics, not like a super gain, but decent. Also very interesting. The weakest one here is actually seafood. The longer term, I'm certainly bullish on seafood, because of this move towards health and all of that. Okay, whatever you do, of course, don't fight the trend, and may the trend be with you.